All right, what up, man? Prof again. You all know what it is. Hey, I'm back again with another video. Okay. Now, in this video, I'm gonna be covering GBP USD, and it's just something I want to bring your attention to in this particular video. Of course, you guys know I trade, for the most part, I trade Euro USD. That's my most traded pairs, but recently, just to prove to you guys that, structure, of course, is king, I like to go to other pairs to show you some certain things about market structure, okay? And in today's video, I'm going to be covering the breaker level, all right? I'm going to be covering what is called the breaker level. Now, if you are new to smart money concept, maybe this is not a concept that you are very, very familiar with, but for the people who maybe have been trading for a period of time, you may have had some experience with trading the market. Ooh, up Nepal, let's get it. Hey, listen, if you're watching from outside Nigeria, you might not know. But hey, up Nepal, man. Up Nepal. Trust me, man. It's crazy. But anyways, in this video, I'm going to be talking about the breaker level. All right. I'm going to be talking about the breaker level. Now, before I even get into the video, of course, I like to show you the conceptual understanding of what I mean by the breaker level. Okay. So let's break down the concept first, and then I'm going to go into the market and show you exactly what I mean. Now, when it comes to the breaker level, it's not something that I use in isolation, okay? The breaker level is not something that I use in isolation. I utilize the breaker level with internal structure, and I'll show you guys exactly what I mean. Now, when it comes to trading the financial market, of course, we know we are trading a probabilistic and a possibility environment, meaning basically that anything can happen in the market, okay? But when certain things happen, it leaves us with certain probabilities and certain possibilities. For example, and of course, I'm talking about the conceptual, depiction of all of these things now. So try and follow me, as I'm going over the concept. And of course, I'm going to be applying the concept on the live market. Of course, today is Monday, the 23rd of September, right? And of course, the markets are open, the markets are live right now. All right. So let's get into this video for real, for real. All right. So when we have a bullish market, such as the one we can see right now, and the market has broken structure to the upside, okay? There has been a break of structure to the upside. Now, after a break of structure has occurred, if you trade smart money concept, of course, there's definitely around this area here, we have had a break of structure to the upside, okay? We've had a break of structure to the upside. So therefore, we are going to be expecting the market to pull back to certain levels, in this case, an order block, where we are now going to be trading from. So in this particular example right now, one possibility that exists is for the market to pull back to this order block here, react from this order block, and you typically want to find your trade somewhere around here to take it to the upside since we're in a bullish market. But this is not the only possibility that exists in this marketplace. Okay, now remember, whenever we have taken our structure to the upside, there must have been an invisible resistance area here, okay, that was broken to the upside. Now, why is that an invisible resistance area? Because the market would have simply, or it was a possibility in the market to not create a new higher high. The market could have reacted from here and then melted to the downside. And when this happens, you can now see something that retail traders would call an M pattern, all right, or a double top pattern, all right? But when the double top pattern fails to form, what are we going to have? We're definitely going to have a break of structure to the upside, okay? We're going to have a break of structure to the upside. So now that invisible resistance area here, okay, that invisible resistance area here now becomes a visible support area. So now having, this narrative, or having this as, context, we can now expect that another possibility that exists in this market is for the market to pull back to this area here, react from this area here, and then push to the upside. Now, if this actually happens, Retail traders, okay, retail traders would say they have had a break and retest. All right. From the last two videos, I broke down a break and retest scenario. If this happens, we can say we have had a break and retest. But what is really happening in this market? Okay, what is really going on in this market? What is really happening is the fact that along the leg of price from this low to this high, obviously price did not just disappear from this area to that area there. The market must have moved in a certain manner that would look something like this, maybe this, and then this. All right. And this will now be the internal structure of the market. And of course, you know, whenever we have internal breaks of structure, of course, we have internal order blocks as well. Okay, so while retail traders, all right, and the reason why I'm putting retail traders in quotes is the fact that, you know, I'm trying to separate between retail strategy. I mean, we're all retail traders at the end of the day, but for lack of better words, I'm trying to differentiate between what you know as retail strategy and smart money concepts. All right. In retail trading, where they trade break and retest, is as simple as, you know, the market broke through a resistance level. That resistance level becomes a support level, and they are hoping that the market comes back to that support level, and they want to trade from that support level. All right. Whereas in smart money, we utilize this area of the market that's called a breaker level. And we don't use that in isolation. We use that with internal structure, all right? With internal structure, all right? So having established all of this, let's go to the live market and prove to ourselves that, you know, all of this that I just broke down is actually true. All right. Now, most of the trades I break down, of course, they are happening or they have happened already. So the trades I break down, they are, of course, in hindsight, but is really a little bit difficult to catch these trades in real life, all right, or in the live market, all right. So keep that in mind. But I believe if you're watching these videos, then you're learning something from these videos, and of course, you're sharpening your skills to be able to catch these trades in real time. Now, if you look around this area here, we have a breaker level, all right. Now, what is the structure? Okay, looking from this low, we have this as a low point. Let's call this a high. Let's call this a low. And of course, you can see we took out this high, break of structure to the upside. Now, as soon as you have that, naturally or normally, you'll be expecting the market to pull back to this order block area here on the daily time frame. So you can now take a trade. And of course, you can see I have templates here for daily demand, daily supply, 4-hour demand, 4-hour supply, and things of that nature. All right. Now, you would want to look to buy from this area when the market pulls back to that area. But the truth is, the market might never pull back to this area. Why? Because it's possible for the market to react from this area and push to the upside, of which the market exactly did that. All right. So what do I mean when I say I use this with internal structure? Now, what I'm going to do is I'm going to mark out this area here. Okay, let's now go to the 4-hour time frame. Let's see if there's anything right there on the internal structure of the market that's telling us to look for buys from that particular area right there. Now, on the 4-hour time frame, you can see there's absolutely nothing there. But this week is telling me something. All right. This week also is telling me something. Right. Again, if you study anatomy of candlestick, okay, if you study the anatomy of candlestick, how a candlestick formed, right? Immediately you look at the candlestick, you know exactly what that candlestick might be telling you, especially on the higher time frame, lower time frame perspective, right? Looking at this on the 4-hour time frame and seeing these weeks, this week to the upside and this week to the downside, this is telling me that this candlestick, this particular candlestick, okay, but all the way up, it closed around here. Okay, after the close of this candlestick, this one opened around here and it sold all the way down. Now, I can't see anything tangible on the 4-hour time frame, but guess what? Let's go to the 1-hour time frame. Let's go to that same area once again. Let's see if we can find something on the 1-hour time frame. Okay, can we find something on the 1-hour time frame? Maybe an order block or something? Yes. Okay, now what do we mean by internal structure? Now look at the structure while the market was crossing that breaker area there. Look at the structure of the market while it was crossing that breaker area there. Do we have valid demand levels along that same area aligned with the breaker level. So from here, we say this is a low. Let's just, call this a high. I'm skipping a lot of these internal structures here. That's a low. This right here is a high. This here is a low. And of course, that was a break of structure to the upside. This is an internal break of structure to the upside that left us an internal order block. And where did the market react to? Exactly that area of internal structure. All right. So this is exactly how I use the breaker level. Okay. That's just one example. Let's find some more before I get to the trade that I actually want to break down. Let's go back to the daily time frame. I really hope you guys understand this, man. Like, pay very, very close attention to what I'm doing. Okay. This area here is another area of breaker on the daily time frame. Now, why do I know this is a breaker level? Because obviously we are in a bullish market, right? Coming from this low right here to this high right here to this low right here, and then we had a break of structure to the upside. Now, based on structure, of course, our order block is going to be down here. Even when we slap in our Fibonacci, okay, even when you slap in your Fibonacci, remember I said the Fibonacci is not dead. You just don't know how to use it, all right? So if we slap in our Fibonacci around this area here, you can see that, that area right there, the area where we can find our order block is the discount area, all right? This order block is definitely in the discount area. This order block right here is right in the golden ratio of the Fibonacci, okay? And a lot of people will be expecting the market to pull back into this area, especially when you have massive candles like this, massive imbalances in the market. Okay, now how is an imbalance formed? An imbalance is formed from massive buying or selling activity in the market. Okay, whereas a fair value gap is formed when a valid order block fails to be mitigated. Now, just to differentiate between the two, if you have structure like this, there's been a break of structure to the upside. When you have a short pullback like this and a continuation to the upside, especially when you have this, maybe you have one order block right here, this area here can be called an imbalance. All right. Well, for me, I don't really like to throw around these terminologies. All right. I really don't like to throw around terminologies, but basically, one difference between an imbalance and a fair value gap is the fact that an imbalance is basically, much larger than a fair value gap. All right. I mean, but at the end of the day, the both of them are inefficiencies in the market. Okay, and who caused that inefficiencies? Of course, bigger players in the market, people who have both the intention to push the market to a particular price level, and of course, they have the capital to push the market to a particular price level, of course, without any reasonable retracements. All right. Now, when it comes to fair value gap, you can see that the market is going to attempt to mitigate that order block, but it's going to fail. So this is something that you would call a fair value gap, whereas this is something that you would call an imbalance. So basically, the imbalance is looking a lot bigger than what you would call a fair value gap. But at the end of the day, they are both inefficiencies in the market. And of course, inefficiencies are to be filled. All right. But at the end of the day, when it comes to possibilities and probabilities, it is a possibility that the market can come to this area, bounce off of this area right here, and then push to the upside. Now, again, it's not just about the breaker level, it's also about the internal structure around this area here, when the market was crossing that level right there. Now, let's go to the 4-hour time frame. Let's see if we had any 4-hour demand levels around that area that the market reacted to. And, it's not even far-fetched, man. As soon as I come to the 4-hour time frame, of course, you can see we had two 4-hour demand levels right here and right here. The market chose to liquidate one of them. The market chose to liquidate this one, and of course, the market still pushed to the upside. Now, when it comes to demand and supply, okay, especially when it has to do with smart money, retail traders, okay, and I'm putting again retail traders in quotes. At the end of the day, we're all retail traders, but just to differentiate between people who trade double top, double bottom, chart patterns, candlestick patterns, let's call them retail traders. And us who trade order blocks, fair value gap, power of three, whatever, let's call us smart money traders, okay? But at the end of the day, based on the capital size that we are trading, we are all retail traders, you know. So yeah, retail traders like to mark out an entire area, an entire zone, whereas smart money traders like to mark out a single order block. Now, if you look at this area here, the market definitely invalidated this order block, and a lot of smart money traders, because the market invalidated this order block, will be looking to sell from this order block right here. Okay, and of course you can see how that order block was definitely smashed away from the market. Because why? We are in a bullish market, guys. We're in a bullish market, and the truth is really, when it comes to demand and supply, you don't want to be too meticulous to say, well, if the market wicks below this order block, then it has invalidated that order block. Now, remember, the breaker level is the previous area of resistance that was broken and turned into support. Now, let's go back to the daily time frame. Okay, where is the valid, okay, the valid supply level? Okay, where was the valid supply level? Now, a valid supply level would have been this area right here. Now, I don't really like to draw my breaker level with like the rectangle tool. I just like to put a single line. But sometimes when things like this happen, when the market is invalidating, you know, some valid order blocks, then you want to put in a box right there. This candle would have been the candle that would have been your valid supply level. Okay, now why is that a valid supply level, or is that even a valid supply level? Of course, it took our internal structure to the downside around here. This is a high, that's a low, that's a high, or this is a high, that's a low, that's a high. So there was kind of like a break of structure in here. Okay, there was kind of like a break of structure in here that made this level a supply level. All right, now if I change the template of this to breaker template, that whole area there is the breaker area. Now, looking at this on the higher time frame and going to the 4-hour time frame right now, you can see that the market never invalidated the breaker area, whereas it invalidated this particular demand level that's aligned with the breaker level. All right, so irrespective of the fact that the market wicked below this demand level, you can still look for a buy opportunity. Why? Because the market is still within the breaker level. All right, so again, I just wanted to establish the fact that breaker levels work. Okay, breaker levels work. Now let's go back to the daily time frame once again. Let's go back to the daily time frame once again. And this is a trade that happened today, 23rd of September, on a Monday. All right, now if you look at this area here, I'm about to mark out this area right here. Again, you can see the market broke structure to the upside. So obviously that area is a breaker level. That's a breaker level. Now, for context, let's mark out the valid supply level that has been broken and turned into a resistance, a support level. Resistance that has been broken and turned into support. Okay, now I'm using more so retail terms. All right, I'm using retail terms or retail terminologies. But anyways, that is our breaker level. Okay, now once that breaker level has been established, we can now move to the 4-hour time frame to see if there is actually a 4-hour order block, okay, that we can trade from. Now, looking at the structure of this market on the 4-hour time frame, what do we see? We can see that we have a low right here. We have this as a break of structure, breaking this high. We have this as a low, and then we had this as a high, leaving this area here as an order block. Okay, leaving that area there as an order block. Now, because the wick of this order block is so long, I'm going to start drawing my order block from the open all the way down to the wick. So now you can see how the breaker level is aligning with a 4-hour demand level. Okay, so this area here is a 4-hour what? Demand level. So what do we see? We see bullish breaker level aligned with 4-hour demand level. So all we need to do right now that we have higher time frame bullish breaker level is aligned with 4-hour demand level, all we simply need to do is now refine this area here to, let's say, the 1-hour time frame, 30 minutes time frame, where we can be looking to take our trade. Now, going to the 1-hour time frame, bro, is like clockwork, man. Look at the 1-hour order block. Look at the 1-hour order block right there. And of course, again, what you can see there is liquidity. All right, so we had liquidity right here. Okay, we had liquidity right there. And of course, we had 1 hour order block right there. Now, if you're trading based on the 1 hour time frame, it's as simple as just setting your buy entry on the 1 hour order block. Okay, now this is massive. Okay, this is massive. This is for like a 46 pip stop loss. And as of right now, you can see the trade has already hit a 1:2 risk to reward ratio. Now, this trade has a lot more potential to go up to the upside, especially as we can see that is invalidating this area of supply. Now, going back to the daily time frame, I'm looking at the market from like a macro perspective. Of course, you can see how the market might be targeting these supply levels around here. Now, why is that area there a supply level? Of course, we had a break of structure to the downside here. We had a break of structure to the downside here. And of course, looking at this area right here, you can see that internal structure suggests to us that that is a very, very valid supply level. Now, looking at this, we have what? We have like a high. We have a low. Of course, we have a high. And then we took our structure to the downside. So our supply area is coming from this area around here. First bullish candle before the break of structure, whatever. That's our supply level. So the market can be gunning for that particular supply level right now. Okay, the market could be gunning for this particular supply level. You can see already that this market is very, very much bullish. Why? Because of course, it's breaking market structure to the upside. Price is going higher. It's creating new higher highs. I mean, you don't need anybody to tell you that this is a bullish market. All right. So that's a very, very quick trade breakdown. And of course, for the guys who say GBP USD and Euro USD are correlated, they always move together. Let's see what's going on Euro USD right now. GBP USD is very, very much bullish, while Euro USD is finding it hard to create a new higher high. Okay, so GBP USD and Euro USD can be correlated for some period of time during the year, but based on seasonal tendencies, sometimes they tend to break out of that correlation, and that's something that's called SMT divergence. Okay, SMT divergence. Now you can look for divergence using the RSI tool, or you can look for divergence using GBP USD and Euro USD. When they break out of that correlation, that's when you get to see SMT divergence. And of course, it has to do with the DXY too as well. So you want to investigate that. You want to go back and research that. All right. So yeah, I just wanted to share that very, very quick trade breakdown. Let's look again at the way the trade presented on the 1 hour time frame. Okay, on the 1 hour time frame. Now, if you were going to take this trade based on lower time frame confirmation, then of course you want to be looking within this area when the market gets to this area right here. And of course, you want to be looking at maybe the 15 minutes time frame, the 5 minutes time frame, if you can get a clear entry. Now, on the 15 minutes time frame, you can see that the market never even gave an entry. Okay, the market never gave an entry. Let's check the 5 minutes time frame. Let's see if the market presented an entry on the 5 minutes time frame. On the 5 minutes time frame, the market still did not give an entry because this is like low, high, low. Of course, you want to wait for the market to break structure and then return back to the order block that caused that break of structure. But again, the market did not present an entry on the 5 minutes time frame. Let's check the 1 minute time frame. Now, oh my God, I don't really like to even show people to go down to the 1 minute time frame because it can get very, very confusing. All right, but the same thing is the case even when you come down to the 1 minute time frame, of course. And again, pay attention to the timing of this trade. This is in the London session. Of course, this is GBP USD, so obviously you want to be looking at this market both in the London session and during the New York session as well. Now, of course, today we had a lot of fundamental activity on Euro. We had a lot of fundamental activity on GBP. So definitely in the London session, of course, if you look, the market is fractal in nature, meaning that structure is structure on any given time frame. Looking at the 1 minute time frame here, you can see we had a low, we had a high, we had a low, we had a high, we had a low. Now we are within the zone, and then we had a break of structure to the upside. All right, or a change of character, whatever you choose to call it, it is what it is. All right. So drawing your order block from this to this here, and now putting your position to long position to right there. All right, it reduces the stop loss drastically to, let's even round it up to 10 pip stop loss, man. Because of course you don't want to be trading with super tight stop losses just because you're a smart money trader. Like, who told you your stop losses have to be very, very tight because you're a smart money trader? I don't know who pushed that narrative, but I mean, come on, you want to make your stop loss reasonable. Okay, place your stop loss where you truly believe that if the market should even retrace, it's not going to hit your stop loss. Place your stop loss, gauge them with your eyes, basically. All right, so looking at this on the 1 minute time frame, you can see what the risk to reward here is looking like. Oh my God. On the 1 hour time frame, we had a 1:2 trade, whereas on the 1 minute time frame, we are having a 1:10 risk to reward trade. Okay, it cannot get simpler than this. It cannot get simpler than this. Now, obviously, if you want to learn more about this, all you need to do is go on Telegram. Okay, go on Telegram. And you want to find yourself within this community right here. You want to find yourself within this community right here. Now, if you want to join this community, just click here. Now, if you're watching this video on YouTube, you can easily just pause the video and scan the QR code that's on your screen right now. Here, I do, market breakdowns. I do, sometimes I give a little bit of signals here and there, but the truth is, I want people to understand trading to the point where they can trade independently, because taking signals, of course, we know it doesn't really work for everybody like that. All right. So sometimes I share my trade ideas on this group. Sometimes I do trade breakdowns and things of that nature. But at the end of the day, if you join this community, there is a lot that you can learn, especially if you can't afford a mentorship and you really, really want to learn how to trade. Of course, the information that I'm giving you guys here is based on experience. All right. Maybe in the future, I'm going to talk about my experience as a trader, as somebody who has been in the trading space for a very long time. Yeah, I'll just share my experience, but this is not that video. Okay, if you want to join this community, of course, just scan the QR code that's here right now, and of course, join the community. And again, if you learn something from this video, please, please, please like the video, and of course, subscribe to the channel, because there are a lot more videos that are going to be coming your way, man. Without any further ado, it's Profit Gang, man. You already know what it is. I'll see you guys in the next one, man. Gang, gang.